What if a major cinema chain is quietly preparing for strategic moves that could reshape its position in the entertainment industry? In recent months, AMC has taken a series of steps that suggest it is reorganizing its capital, restructuring certain assets, and creating room for new opportunities. These actions have raised questions about what direction the company might be exploring, how it plans to strengthen its operations, and what the broader market environment means for AMC at this stage. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. But everyone remember, this is not a financial advice video. A key part of the recent conversation has been AMC's decision to sell a portion of its stake in HYMC. While the company still holds warrants that could allow it to benefit if HYMC performs well in the future, the sale freed up cash that AMC can redirect toward areas viewed as essential to its long-term strategy. The company previously mentioned redeploying capital toward opportunities inside its core business. This type of language typically signals that a company is preparing to reinvest in areas where it sees growth potential. One possibility being discussed in the broader community is AMC gaining access to new theater locations. Reports have circulated about Paramount exploring the sale of national amusement screens in the US, UK, and South America. If such assets become available, AMC, as the largest movie theater chain, could evaluate whether certain locations align with its operational goals. Over the past few years, AMC has consistently focused on upgrading its infrastructure, adding premium screens, renovating locations, and closing underperforming sites. Their strategy has been to improve efficiency, remove weak links, and reinforce their strongest markets. Taking this history into account, it is reasonable to consider that AMC might evaluate new acquisitions if the locations fit within its existing network and operational model. Another idea that is being discussed by observers, though not confirmed by AMC, is the possibility of stepping deeper into film financing or film distribution. This topic came up because a number of recent movies, including international releases, have performed exceptionally well across global markets. There has been increasing interest in how technology, including AI-based localization tools, could help make movies appealing to audiences in foreign countries. If a company like AMC can participate in distribution or collaborate with studios on certain projects, it could potentially expand its revenue streams while remaining inside the entertainment ecosystem it already understands. Again, these discussions remain speculative, but the reasoning behind them stems from AMC's previous involvement in special releases such as major concert films, which demonstrated that alternative distribution models can generate significant box office results. Film distribution is becoming more competitive and more valuable, as seen by recent industry events. Reports involving large companies such as Netflix and Paramount have highlighted how aggressively major players are positioning themselves to gain more influence over film libraries and distribution rights. When multi-billion-dollar bids surface in the industry, it reflects how significant this segment has become. Observers also noted that when a company like Netflix shows interest in theatrical partnerships, it signals a shift from the old assumption that streaming would fully replace theaters. Instead, the trend suggests that the movie industry is diversifying, with theaters continuing to play an important role. In parallel to company-level strategy, discussions have emerged about AMC's debt status and its financial positioning. Observers have pointed out that AMC's debt levels today are lower than they were several years ago. Combined with the company's access to several $100 million in cash, it gives AMC more room to make operational decisions. Additionally, the sale of a portion of the HYMC holdings added tens of millions of dollars in liquidity that could be redirected toward either business improvements or potential future opportunities. Many in the community have been tracking how other cinema companies are performing. For example, when companies such as IMAX and Cinemark show price movements aligned with box office performance, and AMC does not show identical movements, some observers attribute the difference to market mechanics rather than AMC's actual operations. A recurring topic has been the role of dark pool activity in off-exchange trading. Discussions often compare average dark pool usage for AMC versus other companies to highlight how certain buying pressure can be routed away from public exchanges. These comparisons are used by observers to interpret why AMC's price movement may not always mirror industry peers, despite operating within the same box office environment. Another recurring theme is the topic of ownership percentages reported by institutions. Several examples outside of AMC, such as Carvana or Cinemark, have shown institutional ownership figures exceeding 100%. Which naturally leads to debates about how reporting systems count synthetic shares, share loans, and other complex market instruments. When similar reporting quirks appear for AMC, community members often point to these as signals that the reporting system includes shares that originate from multiple layers of lending and borrowing. Market participants have also been discussing regulatory cases involving entities like Virtue, where regulators identified issues related to information firewalls within the firm. While fines and lawsuits do not directly determine AMC's stock price, these events contribute to a broader conversation about transparency in the trading system. The fact that some institutions have been found sharing order information internally, even unintentionally, raises questions about how certain firms may gain advantages during execution. Discussions have further expanded into the topic of margin pressure within financial markets. Analysts often explain the concept using examples where long positions in large-cap stocks or other assets serve as collateral against short positions. If long positions decrease in value, it creates a scenario where the collateral weakens, forcing additional pressure on short positions. Some observers also point to Bitcoin and other assets as potential sources of collateral stress, although the exact composition of collateral varies widely by institution. A number of analysts have referenced signs of funding stress and collateral tightening across global markets, drawing comparisons to past periods where liquidity was strained. Observers point to examples such as movements in the Japanese bond market, the yen carry trade, and reverse repo levels in the U.S. When reverse repo volumes fall to lower levels and liquidity appears less abundant, market watchers interpret this as a sign that institutions may have less room to maneuver during volatile periods. Technical analysis has been used by some community members not as a method to predict outcomes, but as a tool for reading market sentiment. When technical indicators show weakening momentum across the broader market, some observers anticipate increased volatility. This type of analysis is often paired with discussions about settlement cycles, such as T+64 for certain stocks, which can create bottlenecks or timing-based pressure within the system. Combining these elements, the financial restructuring at AMC, the potential for strategic deployments of cash, the shifting film distribution landscape, regulatory discussions, liquidity stress in global markets, and price discrepancies between AMC and similar companies creates a picture of a company positioned in the center of a complex environment. AMC's operations continue to be influenced by box office performance, infrastructure investment, and its ability to adapt to changing market conditions. Meanwhile, broader financial forces shape how the stock trades on a daily basis. Overall, AMC appears to be in a phase where available capital, industry changes, and market structure dynamics all intersect. The company has reduced debt, maintained liquidity, and continues making internal improvements. At the same time, discussions around acquisitions, film distribution, and strategic reinvestment reflect the evolving landscape of the theater industry. The surrounding market environment, highlighted by liquidity stress signals, unusual ownership reports, and differences in price behavior compared to peers, adds an additional layer of complexity. All these factors together create an environment that many observers continue to watch closely as AMC navigates its next steps within a rapidly changing entertainment and financial landscape. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.